I've maintained now for 9 months that rates are going to be higher than we like and longer than we want.
Billionaire Chamath Palihapitiya predicts corrosion of the economy, says Fed rate high could cause real damage. But first, Bitcoin is making another run at $28,000, and this is luring altcoin trader into these coin positions. Also, the recent banking crisis in the United States seems to have shaken the belief of some customers in the legacy of the banking system. According to the Federal Reserve data, customers nearly put $100 billion in deposit in the week ending on March 15. American venture capital investor and entrepreneur Tim Draper said in March 25th report that founders need to consider a more diversified cash management approach due to the overregulation of banks and micromanagement by the government. As part of the contingency plan, Draper suggests business keep at least 6 months of short-term cash in each of 2 banks, one local bank and one global bank, at least 2 payroll worth of cash in Bitcoin or other cryptocurrencies. The move from traditional banking system to cryptocurrency may have already started, as seen from the strong showing of Bitcoin in the past few days. Even after the recent up move, investors do not seem to be hurrying to book profit in Bitcoin. However, the same cannot be said about most altcoins, as they have witnessed a minor pullback. In the short term, traders need to be selective of the cryptocurrency to trade. Let's study the chart of Bitcoin and these 4 altcoins, which may start the next leg up of the up move. At number 1, we have the king of coin, Bitcoin. Number 2 is Litecoin. Coming in at number 3 is no other than XRP. 4th place is Monero. And last but not least, Avalanche. Now back to the interview. In the new episode of the All In podcast, Palihapitiya says that the Fed should have high interest rate by 50 basis points, which he notes might have triggered panic in the short term, but would have eventually exposed what's fundamentally broken in the system. According to the venture capitalist, the Fed can deal with the chaos that comes from imposing a higher interest rate, but they don't have the appropriate tool that can handle inflation running amok.
So I think they should have done the opposite. They should have raised 50 bips. It would have created a little bit more chaos in the short term, but it would have set us up to understand what was fundamentally broken and still give the Federal Reserve the ability to use their balance sheet and use liquidity in the future to solve the problem. They took the worst option, which is neither did they cut, nor did they raise enough. And so I think it's high time that we acknowledge that we have a sticky inflation problem whose back we have to break. We've known since Volcker era what we need to do that, which is you need to get interest rates to be greater than terminal inflation, which means that a 5% Fed funds rate is insufficient. So we're going to need to see a print of 5.5%, 5.75%.
Currently, the Fed fund rate stands at 4.5% to 4.75%. Palihapitiya said that the Fed ambivalence to take interest rate higher could actually hurt the economy.
But if they don't take these steps, we're going to be in this very choppy, neither here, neither there situation. And I think that is what causes the real damage, because it's the corrosive effects of uncertainty and what that does to lending, to risk taking, and that I think is really bad for the economy.